Hello everyone, this is Nilesh Shah, accountant, CFO Advisor, Certified QuickBooks ProAdvisor, and founder of Elite Accurate Ledger LLC. Today, I want to talk about something that many construction business owners feel. Not everyone talks about openly. Your business is busy, jobs are coming in, crews are working, invoices are going out, revenue looks good. But when you check the bank account, you ask yourself, a painful question: where did the money go? And if you have ever felt that way, I want you to know something very important. You are not alone. A construction company can look profitable on paper and still feel cash poor in real life. That does not always mean the business is failing. It usually means there is a gap between profit, cash flow, billing, job costing, and financial timing. And that is exactly what we are going to talk about today. So I have some slides for you. Revenue is not the same as cash. Let me start with the simple truth. Revenue is what you earn. Cash is what you actually have available. Many construction owners look at their sales and think, we did $80,000 this month. We have 3 active jobs. We just signed a new project. We should be doing well. But then payroll comes due, material suppliers need to be paid, subcontractors are waiting, insurance, fuel, equipment, rent, loan payments, and overhead still needs to be covered. And suddenly, even with the strong revenue, the bank account feels tight. This is where many construction companies get trapped. They confuse sales with cash. A signed contract does not pay bills. An invoice does not pay bills. A completed job does not pay bills unless the money has actually been collected and managed properly. Let's say you complete $50,000 project. On paper that looks great, but maybe the customer has not paid yet. Maybe you have already paid $18,000 for materials. Maybe labor cost you $12,000. Maybe subcontractors cost another $8,000. Maybe overhead took another $5,000. So even though the job looks good from the outside, your cash may already be gone before the final payment comes in. That is why revenue alone can be misleading. In construction, timing matters. When money comes in and when money goes out, you can make or break the business. Next, the construction cash flow gap. Now, let's talk about the cash flow gap. This is one of the biggest reasons construction businesses feel cash poor. In many industries, a business sells something and gets paid quickly, but construction is different. You often have to spend money before you collect money. You may need to buy materials upfront. You may need to pay your crew every week. You may need to pay subcontractors before the customers pay you. You may need permits, equipment rentals, fuel, insurance, and supplies before the project is finished. That creates a gap. Money goes out first, money comes in later. And that gap can feel very stressful. Let me give you a simple example. You start a remodeling job, the contract is $100,000. The project should be profitable, but in the first few weeks, you pay for materials, labor, subcontractors, and equipment. Maybe you have already spent $35,000 before you receive the next progress payment. Now, the project may be still be profitable overall, but your cash is tight today. And today is what business owners feel. You do not feel profit on a financial statement. You feel cash flow in your bank account. That is why a contractor can say, I know we are making money, but I do not feel it. That feeling is real, and it usually means cash flow timing is not being tracked closely enough. Next, profit can disappear inside the job. Here is another problem. Sometimes the business looks profitable overall, but individual jobs are quietly losing money. This happens when job costing is not accurate. A contractor may think we made money on on that job, but when we look deeper, we may find something different. Maybe labor hours were higher than expected. Maybe materials went over budget. Maybe the subcontractor invoice was not assigned to the correct job. Maybe small supply runs were charged to general expenses instead of the project. Maybe change orders were completed but never billed. Maybe overhead was not included when calculating profit. This is where profit disappears. Not all at once, slowly, quietly, a few $100 here, a few labor hours there, a material price increase, a missed change order, an extra subcontractor invoice. By the time the job is done, the owner may think they made $15,000, but the real profit may be much lower. In some cases, the job may have barely broken even. And that is why I always say you do not need a bookkeeping, you need construction focused financial clarity. You need to know which jobs are profitable and which jobs are draining cash, because a construction business does not grow just by taking more jobs. It grows by taking the right jobs, pricing them correctly, tracking them properly, and protecting profit on each project. Next, unbilled change orders drain cash. Now let's talk about change orders. This is a big one. In construction, changes happen all the time. The client wants something extra. The scope changes, materials change. There is unexpected work behind the wall. The project takes longer than expected, and many contractors say, we will take care of it. That shows good customer service, but from a financial standpoint, it can be dangerous if the change is not documented and billed. Small change orders can quietly drain thousands of dollars. Let's say there is an extra $750 in labor and materials, then another $1,200, then another $500, then another $2,000. Individually, each one may not feel huge, but together, those missed change orders can destroy the profit on a job. And what that makes it worse is this: you already paid for the labor, you already paid for materials, your team already did the work, but the business never collected the money. That is not just a paperwork issue, that is a cash flow issue, that is a profit issue, that is an owner stress issue. So, one of the biggest lessons for construction business owners is this: every change needs a financial process, not just a verbal conversation, not just a text message, not just we will figure it out later. There should be documentation, approval, pricing, and billing. Because if you do not control change orders will control your cash flow. Next, payroll comes every week, but cash does not. This part is very important. Construction payroll is not flexible. Your crew needs to be paid. Your subcontractors expect payment. Your suppliers expect payment. Your insurance, taxes, equipment payments do not wait just because the customer is late. This creates pressure. A contractor may have strong receivables, meaning customers owe money, but receivables do not pay payroll. Cash pays payroll. This is where many business owners feel squeezed. They are profitable on paper, but they are borrowing from one job to pay for another. They are using today's deposit to cover last week's bills. They are waiting for one customer payment so they can pay three other bills. That is dangerous cycle. And many good contractors fall into it. Not because they are bad business owners, not because they do poor work, but because the financial system is not giving them the right information at the right time. A construction owner should be able to answer these questions every week. How much cash do we have today? What payments are coming in this week? What bills must be paid this week? Which jobs are using the most cash? Which invoices are overdue? Can we safely take the next job without creating pressure? This kind of weekly cash flow review can completely change how a contractor runs the business. Next, overhead is often forgotten. Now let's talk about overhead. This is another reason a construction business can look profitable but feels cash poor. Many contractors price job based on direct cost, labor, materials, subcontractors, equipment, but they forget to include overhead properly. Overhead includes things like insurance, office expenses, bookkeeping, software, phones, vehicles, fuel, marketing, licenses, admin time, owner salary, loan payments, rent, tools, repairs, professional fees. These costs are real. They may not belong to one specific job, but they still need to be paid by the business. If your pricing does not account for overhead, you may think your jobs are profitable when they are not profitable enough. For example, a job may show a gross profit of $10,000, but after overhead, the true net profit may be much smaller. And if overhead is not tracked and reviewed, the owner may keep wondering, we are making money on jobs, so why is there nothing left? The answer may be that the jobs are not covering the full cost of running the business. This is why construction business owners need more than a basic profit and loss report. They need reports that connect profitability, overhead, cash flow, and overpay. Next, accounts receivable can make you cash poor. Now let's talk about unpaid invoices. This is one of the most common cash flow problems in construction. You did the work, you send the invoice, the revenue is recorded, but the customer has not paid yet. On your books, the business may look profitable, but in your bank account, the money is missing. That is why account receivable must be watched closely. A growing construction business can get into serious trouble when invoices are not collected on time, especially when the business keeps taking on more work because every new job needs cash. If old invoices are unpaid and new jobs require upfront spending, the businesses can feel like it is constantly chasing money. This is why I recommend that construction owners review unpaid invoices every week, not once in a while, not only when cash gets tight. Every week, you should know who owes you money, how much do they owe, how old is the invoice, was the invoice sent correctly, is there a dispute, is anything missing, who is following up? Because cash flow improves when collection becomes a system, not an emergency. Next, growth can create cash pressure. This part may surprise some people. Growth can actually make cash flow worse if it is not managed properly. Many business owners think if we get more jobs, we will have more money. Sometimes that is true, but sometimes more jobs create more pressure. More jobs mean more payroll, more materials, more subcontractors, more equipment, more scheduling pressure, more admin work, more mistakes if the systems are not ready. If the business grows faster than the financial systems, cash flow can become painful. This is why some contractors say, we are busier than ever, but I feel more stressed than ever. That is not unusual. Growth without financial control can feel heavy. Growth with strong systems feels different. When job costing, billing, payroll, receivables, and cash flow are organized, growth becomes more manageable. But when those systems are missing, growth can expose every weakness in the business. So the goal is not just more revenue, the goal is profitable, controlled, cash healthy growth. Next, what the owner really needs to see. Now let's bring this together. A construction owner does not need complicated financial reports that sit in a folder and never get used. The owner needs simple, clear, useful numbers. Numbers that help with real decisions. You need to know which jobs are profitable, which jobs are losing money, which customers are slow to pay, which bills are coming due, how much cash is needed for payroll, how much cash is tied up in projects, whether your pricing is covering overhead, whether your change orders are being billed, whether growth is helping or hurting cash flow. This is the difference between bookkeeping and financial clarity. Bookkeeping records what happened. Financial clarity that helps you understand what is happening and what to do next. That is where CFO advisory becomes valuable because the goal is not just to have clean books, the goal is to make better decisions with your numbers. Next, simple weekly cash flow system. If you are a construction business owner listening today, here is a simple starting point. Every week, review five things. Number one, cash in the bank. How much cash is available today? Not what is expected, not what is invoiced, what is actually available. Number two, money coming in. What customers' payments are expected this week and next week? Are the invoices overdue? Does anyone need a follow up? Number three, money going out. What bills, payroll, supplier payments, subcontractor payments, loan payments, and taxes are due? Number four, job cash position. Which jobs are using cash right now? Which jobs have been billed? Which jobs are waiting for payment? Number five, profit by job. Are jobs staying within budget? Are labor and materials being tracked correctly? Are change orders being billed? If you review these five things every week, you will feel more in control. You may not solve everything overnight, but you will stop flying blind. And in construction, flying blind is expensive. Next, my personal message to the construction business owner. I want to speak directly to the construction business owner for a moment. You work hard, you deal with clients, employees, subcontractors, suppliers, deadlines, weather, inspections, pricing, and constant pressure. You carry a lot. And sometimes when the bank account feels tight, it can feel personal. You may think, what am I doing wrong? Why am I working this hard and still feeling behind? Why does the business look stressful from the outside but stressful from the inside? I want you to know something. This does not mean you are not a good business owner. It means your business needs better financial visibility. The numbers need to tell you the truth earlier before cash gets tight, before profit disappears, before change orders are forgotten, before growth creates stress. You deserve to know where the money is going. You deserve to know which jobs are actually profitable. You deserve to make decisions with confidence, not guesswork. That is what strong accounting, bookkeeping, and CFO advisory can do for a construction business. Next, final takeaway. So let's summarize today's message. Your construction business can look profitable but still feel cash poor because revenue is not the same as cash. Cash often goes out before money comes in. Job cost may be tracked correctly. Change orders may not be billed. Payroll comes due before customers pay. Overhead may not be included in pricing. Invoices may be unpaid too long. Growth may be creating pressure instead of freedom. But the good news is this, when you understand your numbers, you can fix the leaks. You can improve cash flow, you can protect profit, you can price better, you can collect faster, you can make smarter decisions. And most importantly, you can build a business that does not just look successful from the outside, but actually feels stronger on the inside. Next, if you are a construction business owner and you feel like your company is busy, but the cash is still tight, this may be the right time to take a deeper look at your numbers. At Nilesh Shah Financial Services, operated by Elite Accurate Ledger LLC, we help construction businesses with accounting, bookkeeping, cash flow clarity, job costing, and CFO advisory support. We help you find where cash may be slipping through the cracks and what steps you can take to strengthen profit and cash flow. If you would like help, I invite you to schedule a profit and cash flow analysis session. We will look at where you are today, what may be causing pressure, and what financial systems can help you move forward with more clarity and confidence. Thank you for joining me today. This is Nilesh Shah from Nilesh Shah Financial Services, operating under Elite Accurate Ledger LLC. Remember, your business does not need more financial confusion. You need clarity, control, and confidence in your numbers. Thank you and have a great day. Thanks. Bye.